Banks are considered to be very safe and reliable when it comes to saving or storing your money. But what happens if a bank goes bankrupt or a bank fails? In one such news coming right in from the United States of Silicon Valley Bank, we get to see how a major bank that has been a support and backbone for several tech companies, startups, and entrepreneurs in the United States as well as around the world failed on March 10, 2023, just several days after being reported as one of the major banks in the United States by Forbes and has been taken over by the government. In today's video, we shall look into how this happened and what will be its impact on the tech companies and the economy. So without any further ado, let's get started.
Yeah, so for those who may just be tuning in or getting wind of this, the events that have happened over the last 24 hours has led to the failure of Silicon Valley Bank, the backbone of the tech industry.
The surprise collapse on Friday, startup-focused lender SVB Financial Group became the greatest bank failure since the financial crisis of 2008.
First, let me give to you a bit of history behind the Silicon Valley Bank. The word Silicon Valley basically stands for an area in California where most of the biggest tech giants such as Apple, Google, Facebook, etc. have their headquarters. The Silicon Valley Bank was founded in 1983 and also has its headquarters in Santa Clara, California, United States. It is the 16th largest bank of United States and has over $175 billion in deposits. It was also known as the bank of choice for many startups and venture capitalists as it offered financing, banking, and advisory services to them. Some of its most famous clients include Airbnb, Cisco, Fitbit, Pinterest, and Block Inc. The SVB has an exposure to over 20 startups in India and had begun investing here since the year 2003. SVB has invested in several Indian firms including Paytm, Carvale, Bluestone, etc. Let us understand it this way. When you deposit money in the bank makes money primarily by two ways. One, by loaning it out to others and charging them interest. And the second way is by buying assets, which gives it positive returns in the future. Now, initially what happened is that the tech startups in which SVB had invested were performing quite well, due to which its deposits in the bank grew from $44 billion in 2017 to $189 billion in 2021. Now, this was not in proportion to the loans it was giving out. In fact, the loans grew only from $23 billion to $66 billion in 2021, which was comparatively very less. What it did is, by the end of 2021, it invested majority of its investments into bonds and treasuries. Before we go on to the Silicon Valley fiasco, let us first understand the status of the American bonds, which is considered to be the most secured investment world over by several agencies. Macquarie, a professor emeritus at Santa Clara University who studies historical investment returns, said, and I quote, "Even if you go back 250 years, you can't find a worse year than 2022. Unquote. This implosion is largely a function of the US Federal Reserve's raising the interest rates in order to fight the inflation. This peaked highest rate in June 2022 by raising 500 basis points equal to 5% from almost zero. Macquarie's word for inflation, in short, is kryptonite. The total bond index lost more than 13% in 2022. Imagine its impact on the bond market, especially for organizations such as the Silicon Valley Bank, which had its maximum capital invested in the long-term bonds. If you notice, the share price of Silicon Valley Bank, which is a favorite bank for startups, venture capitalists, was around $200 in 2020, which rose to $800 in 2021, and then started falling till it collapsed on 10th March 2023 and was taken over by the government agency, FDIC, that ensures the deposits in bank up to $250,000. FDIC will be controlling SVB until another bank or individual buys its operations.
This is news that should seriously concern you. After the American regulators decided to pull the plug on the Silicon Valley Bank, Elon Musk has now made a statement that he is open to the idea of buying the collapsed Silicon Valley Bank and turning it into a digital bank.
Fall in the share market was the biggest indicator for the investors to withdraw money and investments from the bank, creating a cascading impact on the reserve capital of the bank. Meanwhile, the CEO of Silicon Valley Bank, Greg Becker, sold stocks worth $3.6 million and creating a total panic among investors, and no one was ready to invest capital in the bank. Even the efforts to find a buyer or a merger partner failed. The impact of SVB on the tech industry and the economy is unclear as of now, but we would slowly and gradually see it unwrap over the next few weeks. I hope you found this video informative. If so, do let me know in the comments below. Until then, do subscribe to the channel. See you next time.